All right. All right, let's do this. First off, Trump takes Elon Musk power away. Do you guys remember that email he sent out? You either submit, what you did this week, or it's considered a resignation. He won't be doing that anymore. He's not allowed to give commands. All right. So Trump made a point of clarifying, and Musk was in the room. Musk is no longer allowed to tell people what to do. He has been regulated to a advisory role only. Trump puts a limit on Elon Musk. And like I said, this just falls in line with that whole relationship falling apart because Elon Musk thinks he's the one in power.
Coach, I think he was also in a suit and tie, which is telling too.
He was, wasn't he?
Yes,
I didn't
sir.
catch that.
Yes, sir.
I did not catch that. You are so right.
And he's dealing with a narcissist.
Well, they
God,
both narcissists. That's the
yeah,
whole point.
one is in charge, one is not. Like, look, I'm the man.
Yeah. Well, yeah, Trump puts a limit on Elon Musk, and he
Great.
did it in front of everybody. But I did not catch that part though, that he's in an actual suit. Now, but now I'm gonna tell you what that kind of falls into because people were already complaining when the reporter says, "Why, ask Zelensky, why are you not in the suit?" I think that's the reason why he's wearing the suit because they don't want to be hypocrites.
All that might be true. I still see it as a power play, a flex, or
Yeah,
whatever
yeah, yeah.
to
I can,
have
I
that
can see that.
correction.
I can see that. Yeah, I can see that as well. All right, but that's that point. Now, here's the other thing. Let's kind of walk you through the narrative of what happened with Bitcoin. So we know that Trump, and I showed you that he has a crypto company that he started in September of last year. Liberty Financial, I think it's called, and he also had crypto backers who gave him money for his campaign. So he has an obligation to make sure crypto stays up. So when he knew that those tariffs were going to be put in place for Canada and Mexico, he made an announcement about the strategic reserve, right? And sure enough, crypto went up the following day when the tariffs were put in place. Every single thing else went down. So he made sure that crypto propped up while everything else was falling. Well, obviously, he has people found out that that strategic reserve was only current crypto that the government already were in possession of. There was no new buying of coins. So that started driving the markets back down. He also had that meeting about crypto that fell through. There was nothing resolved. There was nothing that came out of it. So that also caused the markets to fall. So now crypto was sitting at about 80,000 before he made the strategic reserve announcement. That drove the market back up to 85, maybe a little bit higher. And here we are now a week later, and it's back down at 80. Nothing that he did kept that market up. Now, I will give another kind of side point is that MicroStrategy came out with a article the day before that strategic reserve announcement, and they said they invested about $2 billion in crypto. So once again, when Trump made that announcement about the strategic reserve, MicroStrategy made a profit on that $2 billion. Like you can see the manipulation, guys. It is blatant, blatant. You can see it. Now, I don't know. I don't know if I was able to show you that on Friday. If I did, I'll just reiterate it. But there was an article I don't think I was able to show it to you. So they found an article, well, I found an article where they found evidence that there was a certain crypto. There was a guy that was being investigated for crypto. And then there was evidence that he made an investment in the Liberty. He made some kind of investment in that Liberty crypto company, the one that Trump owns. And then shortly after that, the investigation on him dropped. I had all this information on Friday, but we had so much to go over, I wasn't able to show it. And now I just don't know where it is. I don't remember the guy's name. Let me see if I can look it up. Did anybody did anybody else hear something like this?
No, but I wouldn't be surprised because it just fits his narrative.
Yeah. Here it is. Here it is. SEC halts fraud prosecution of Chinese crypto bro whose purchases enriched Trump. Justin Sun, he made a huge investment in Liberty Financial, and then the SEC stops the investigation. Like I said, it's blatant, guys, right in front of your face. And all it is like a message to anybody else. Anybody else that wants to pay off the president, you already know the pattern. Never in history have I seen this level. They at least try to hide it. Not anymore. You got the 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 Supreme Court blatantly taking bribes. They even changed the laws where they can take bribes. Like, it's just blatant. Never seen anything like it. So basically, the takeaway of that is crypto is back at 80. We had already speculated that it's probably going to go down to 60. And it might even after that. And the reason why we say 60, and I had Schiff, the investment leaders, he kind of also echoed what I predicted about that 60,000. And the reason why we both set that mark, because that is where the market was before the ETFs. Because the ETFs created false momentum. Trump's election created false momentum. So when you get rid of all that fake momentum and it gets back to where it was, it's going to be somewhere around 60,000. Now, once it gets to the 60,000, that's when it's going to start losing the real value that it has. Now, keep in mind when I say real value, because I had explained this before. Some crypto does have value. The value is in the infrastructure, the blockchain. And what have I told you to look for? You want to see the blockchain and all of their technologies implemented into a financial institution, a government agency, or a corporate entity. And if any crypto or blockchain from a crypto is not implemented in a government agency, a financial institution, or a corporate entity, it's not real. There is no value. It's fake. So when it gets down to that 40,000, or when it gets down to that 60,000, it's going to start dropping from there, because all of that real value is going to start going down as well. Please do not listen to the markets telling you that crypto's falling because of the tariffs. That's false. Crypto has nothing to do with tariffs. But that's what they're going to try to tell you to make you think that crypto's real. It's not. And every single professional, every single hedge fund manager, even though they're using crypto and trading crypto, they will tell you it's fake. They will tell you it's a casino. I have shown you videos in the past couple of weeks where the guy from the Argentinian crypto admitted that it's a casino. And if you guys want me to repost those, it's already on the WhatsApp. I will go get it and post it directly into your WhatsApp. The crypto professional that was behind the Argentinian, I can't remember the name of the coin, but I showed you an interview that he had with CoffeeZilla, where he literally admitted it's a casino. There is no value in it. But when we start getting down to that 60,000, now you're going to start seeing it fall maybe to somewhere around 40. But we're going to monitor it and watch it just to see if the prediction goes the way we want. Next, I wanted to mention the NVIDIA. Now, this is good news, guys. We've heard the terms buy when there's blood in the streets. This is blood in the streets. NVIDIA has lost $1 trillion in value ever since this tariff thing, ever since the sell-off, that happened with their earnings. This is not a bad thing. We already know where the value of Tesla is. We already know the eventual direction that Tesla has to go, right? Because what do I say? After this fake momentum calms down, after the uncertainty and the fears go away, the real value of the markets will take over. And the video is going to shoot back up. Because here's what I told you. When this kind of stuff happens, it is holding back the value. But it's only so long that you can hold back the reins on something that powerful. That value is going to keep going into the markets, and the price is going to have to adjust. And when it does, you're going to see NVIDIA shoot back up and probably beyond. So this is a good thing that NVIDIA is coming back $1 trillion because it's a perfect time to buy. You just got a discount. And isn't that what the value investors say? You buy it on discount. That's what this is. NVIDIA is now on discount. It's no longer at its true value of $3 trillion. Now is a perfect time to invest in NVIDIA as it goes back up to $3 trillion and beyond. But obviously you want to wait. And this is kind of what we were talking about in the presentation yesterday in the webinar, is that we don't want to be in the markets when it's volatile, when it's uncertain, when it's chaos. We wait, we wonder, right? We watch, we wonder, we wait. We let the markets calm down. We get a confirmation that the markets are recovering. That creates a new trend, a new cycle. We get in at the early stages, and then we can ride it up for another rally. So you want to wait until NVIDIA bottoms out with this sell-off. And it's coinciding with the correction, because I found another article that talked about NVIDIA is going through a correction. I don't know what I did with the article, but the article literally said that NVIDIA is going through a correction. It's already gone down 10%. And now this is the point of the correction that I wanted to mention, so I can really kind of focus you guys on what you're really looking at. Because when we're talking about the Dow Jones doing a correction, the S&P doing a correction, and the NASDAQ doing a correction, it's not the spot markets that's doing it. It's the corporations that are inside of it. We told you what the correction was in this weekend's webinar. We showed you the proof of what that correction is. So the correction is not the actual spot indexes. Pay attention, every single corporation on the stock market has to do a correction. Let me say it again. A true correction. Every single IPO, that's the word we should use. Every single registered IPO is going to do a 10% correction for it to be a real correction. That should really put it in perspective. So what does that mean? That means that right now, let me show you the article. Right now, Nvidia, no, I'm sorry, this is the article here. Nvidia stock falls 6% into a correction. So we know that Nvidia is a part of these companies going through corrections, right? Well, NASDAQ is already in their correction. Let me see if I can find that article. Yeah, NASDAQ entered a correction about 5 days ago, right? So what we're looking for now, first off, let me put that in perspective. There are 30 how many companies are on NASDAQ? 100. There are 100 companies on NASDAQ. Majority of them are tech. So what NASDAQ doing a correction means is that there are 100 companies that had a correction. Even though it's on average, that's what this means. That all 100 of those companies had a correction. So now what's next? S&P 500. Now, I did the numbers on the S&P 500. I can show you the chart. The 52-week high on the S&P 500 is somewhere around 61 and change. 6,100 and change, right? A little bit under 62. Well, if you do a 10% on that, the markets, the S&P 500 spot market would have to come down to about 5,500. Right now, it's sitting at about 57, which is about 8%. We already got 8% drop on the S&P 500. We needed it to go down to about 5,500 for the S&P to give us the correction. And then once again, there are 500 companies in the S&P 500. So guess what? The majority, if not all, of those 500 companies are going to do a correction on their individual price. And then right now on the Dow Jones, we actually only have about a 1% drop. But that makes sense because it's only 30 companies, very small amounts. So the drop is not going to be the same. Plus the Dow Jones has risen higher, right? But right now we're only sitting at about 1% with the Dow Jones. But once again, that's only 30 companies. I promise you, once we get the S&P to drop with those 500 companies, those 30 companies in the Dow, a lot of them are in that S&P 500. So we can very soon see the Dow Jones also give us a correction. And once we get a correction from all three indices, that is when we have the official correction for the whole markets, when we get the reset. Hope this makes sense. Now, I'm not saying that we're going, I just think I think that's the goal. I think that's the plan. And I'm not even going to call it a Trump plan. Whoever is in control, I think that's their plan. Their plan is to drive the market so far down, at least by 10%. Or we're going to monitor the correction to see if we get it in all three markets. And now that segues into Trump controlling the markets. So he's got this yo-yo thing he's doing right now where we talked about this too, that he was going to turn the tariffs around. And sure enough, I don't think it went 3 days. I don't think it went 48 hours. And he was already talking about, oh yeah, okay, let's wait. We'll give you to April 2nd. That's the new deadline, April 2nd. Before he tries to put the tariffs back in place. It's a yo-yo, guys, and he's losing confidence. The markets are losing confidence. The U.S. economy, the U.S. dollar is all losing confidence. This morning on Bloomberg, they said that most of the investors are going other places to invest. Because there's too much uncertainty in the U.S. markets. Flip-flop. Tariff flip-flops. Now, give me a second. There's one more thing I wanted to show. Oh, yeah. So when Trump reversed the tariffs, Powell also kind of reassured everybody about the economy. And here's the point about this article that I've said this in the past. Powell is one of the most powerful people, if not in the US. Powell is probably one of the most powerful people on this planet because his words can change everything. And I've told you this. When words come out of his mouth, everybody listens. Everybody changes. Everybody adjusts. So Powell reassures everybody that the economy is still good. And technically it is. By the metrics, our economy is still strong. Despite everybody trying to change that, despite everybody, trying to throw a wrench in it, changing unemployment, Powell is still saying that the metrics are good. Stop listening to the speculation. Stop following the flip-flops of tariffs. Because Powell only analyzes what's currently in place. He can care less about the flip-flop tariffs. What's currently in place? I'm going to do my analysis based on what's currently in place. And that is the lesson that I've been teaching you guys for 2 weeks now. Stop listening to all of the echoes and all of the noise about the speculation of what tariffs are going to do. We can care less. What is actually in place? What is the law? What is the policy in place? So sure enough, when Powell made this announcement, the market jumped on Friday. But that's not going to last. This week, we're probably going to have another down week. And it comes back to the fear and uncertainty of the markets. All right, I think there was one more thing that I wanted to share. Oh, this. This is saturated in the markets right now. The Trump put. And this is the final lesson we'll go through before we kind of get into other things. When I see this, like I said, guys, I saw this all over the place. The Trump put. When I see this, I look at it differently than everyone else. Because I'm going to tell you what this means to me. This is normalizing that it's okay to gamble in the stock market. That's all this is. When somebody says the Trump put, do you know what I hear? I'm going to put my money on red. And then you might start hearing the Trump call. And when I start hearing the Trump call, do you know what I hear? I'm going to put all my money on black. It's a gambling term. Puts and calls. Roulette wheel. Are we which way are we gambling? Gambling is normalized in the stock market. But nobody will admit that puts and calls are gambling. But that's all it is. They went so far as to name it a Trump put, expecting him to do something or say something so they can short the market. So the lesson, be careful of the gamblers. The majority of people in the stock market are gamblers. The markets are going to move with the gambling sentiment and mentality. Be cautious that you're not also getting into the gambling. We want protection, power, precision, and proficiency. And you're never going to get that with gambling or trading a gambling market, a casino market. So this is the new prime minister. Let me check on my my share. I think he was voted in over the week or the weekend.
We didn't ask for this fight. We didn't ask for this fight. But Canadians are always ready when someone else drops the gloves. So the Americans, they should make no mistake, in trade as in hockey, Canada will win. Those Americans.
Now, to Americans, I say to you, as in hockey.
So this is Mark Carney. He used to be the governor of the Canadian Central Bank. The Bank of Canada is their central bank. He used to be the governor of that central bank. So he's an economist. He knows how the economy works. He knows how everything works, how the dollar works, the central bank system. Very, very intelligent man. So I believe this is the person that replaced Trudeau. I don't know if we're going to continue to see Trudeau, hear Trudeau. I don't know how this works in Canada. Is Trudeau going to take an advisory role? But this is the new prime minister. So let's see if we start seeing more of his face, or is Trudeau still in the picture? I don't know. But I at least wanted to introduce him. So when we start showing you more Canadian stuff, you know why. You might start seeing his face a lot more. All right, let's see if there's anything else. I think that's it, guys. Do we have any questions on any of the articles, the current events, anything that we talked about? Maybe anything that you guys saw that we want to discuss? Article, current events, any news, perspective, commentary? Because from here, we're going to go into the 12 laws of the universe. I'm going to take you into the actual course workbook. But before we transition, I want to make sure everybody's okay.
I'm good. Just a comment. That Fibonacci class was really eye opening. The stuff that Lonnie was showing combined with you got, what you presented was really powerful. So I just wanted to, note that.
Yeah, man. That's and that was the point. Like it's kind of a reset, right? Because I want, and I'm gonna try to explain this in a certain way because I don't want to discount your education, right? You need to understand basic economics. You need to understand basic finance, right? You need to understand a little bit of geopolitics. You need to understand the prime correlation, causal sequence, all of these things that we teach you to be able to analyze and be able to translate the markets. Here's what I'm saying, though. The majority of the people in the stock market don't do that. They don't educate themselves on that level. And a lot of them, like Lonnie, are still making money just through technical analysis. But the thing is, once again, the thing they don't tell you is they give the money back because they're not able to read the markets. When the markets will tell them, hey, come get the money, no problem. They'll come get it. But they don't know what they're doing right or doing wrong. So at some point, they're going to give the money back. That's just how it is. So you need that education. And we kind of already explained that in the masterclass. But here's my secondary point. If you guys never, ever, ever did any education at all, not one thing, and you only focus on the Fibonacci sequence, finding the rhythm, finding the range, finding the numbers, you're still going to make money. The universe and the stock market is still going to be generous and give you the money. But here's the difference. Number one, you're not going to give the money back because you know the Fibonacci timeline when they're going to try to take the money back. So you can stay out of the markets. Like Lonnie was saying, you got to find out where the chaos is. We don't want the chaos. And by using the Fibonacci, you know where the chaos is and when the chaos is. So you wait until the chaos dissipates, You find your rhythm, and then you can get back in for short periods of time and make money, and then you're back out. So you're going to make money a lot more consistent. That's the benefit of the Fibonacci. If you never did the education portion, you're still going to be a recipient of the generosity. Now let's bring the education back in. If you educate yourself, you're allowing the universe to give you more. And that's what we're going to go through right now with the 12 laws. You're not just living by one law. The law of rhythm is a law. Okay, I'm only going to live by the law of rhythm. So I'm going to find my calculations. You're following the laws. The universe is going to pay you based on that. But if you're following all 12 laws, the universe is going to, you're putting yourself in a position for the universe to be more generous and give you more. It's that simple. That's the takeaway. Just by following it, you're giving yourself a better chance of making money. When your education may be a little bit off, when your rhythm may be a little bit off, you have all these other 12 laws that you're doing, basically allowing the markets and the universe to still be generous. But if you're not using the Fibonacci sequence, if you're not using that rhythm, you're going to have less of a chance. Maybe no chance at all. All right. So let's go ahead and get into this. I'm going to continue to broadcast on TikTok and YouTube. Let everybody get a chance to see the course material. So let me set it up for those of you that are on TikTok. We focus on a version, or I guess a organic version of the law of attraction. The law of attraction is a fake concept. All of the law of attraction books, all the law of attraction videos that you watch, any information, any article, is not giving you the full gist, because they're telling you to only follow the law of attraction. But the law of attraction is one law of 12. You need to follow all 12 laws, not just one. And that's what we're about to go over right now. We're going to go over all 12 laws. And if you follow all 12 laws of the universe, you're going to give yourself a better chance of getting your manifestation and your affirmations. And then I'm going to show you how to apply that to the stock market. That's what this whole presentation is. We're going to show you the 12 laws. We're going to show you how it applies to the law of attraction, manifestations, and affirmations. And then we're going to also show you how it applies to your trading. So you get the full understanding of how the real law of attraction. And I want to find another name for it. So let's go ahead and get into this. The information that we're going to go over comes directly from the workbook of the course that we offer. All right, let's find those laws. Actually, this is it here. So on Friday, we went over the beacon, right? We went the entire step of the beacon, showing you how this acronym, you can use it to get into rhythm with the universe, to sync up, to connect with the universe. The universe is generous. The universe has a cadence, a rhythm. We showed you in the presentation over the weekend that every living entity, every living organism has a heartbeat. We showed you that stars have a heartbeat, planets have a heartbeat. And not almost, every single living organism has some form of a pulse or heartbeat. And then all of those living organisms, if they're in the same vicinity, they will sync up in their pulse and heartbeat. So when we're in the stock market and you have all of these market participants, all of these living organisms, and then we also prove that the stock market itself is a living organism. So all of the market participants and the stock market is syncing up, and it creates a cadence. And if you are sync and in that rhythm with the markets, with other participants, you're going to make money, period. So let's go over the beacon real quick. You have to have a belief, that the markets are going to reward you. You have to explore opportunities for the markets to reward you. You have to affirm those opportunities to kind of reassure yourself with a positivity and confidence. You have to collect all of the resources that you need in order to get the things that you're looking for. You have to be obedient to the 12 laws of the universe, and you have to nurture all of those opportunities in order to be able to be successful. Today, we're going to dive into that obedience and show you the 12 laws. All right, so we talked about on Friday the difference between the two sets of laws. There's a law of unnatural selection. I'm going to recap what that is. And we have the 12 laws of the universe. And when you're in the stock market, you're living by one of these two sets of laws. So what is the law of unnatural selection? Let me recap what we went over on Friday. We have the law of natural selection. And this comes from Charles Darwin. And Charles Darwin basically said that if you have two organisms competing for resources, and one organism is improving, becoming a better organism, and you have another organism, living organism, that's not improving, the one that is modifying and improving is going to fare better. And the one that's not improving is going to fare worse. That is the best way to explain natural selection by Charles Darwin. He specifically said that it has nothing to do with strength. But over time, people have misquoted Charles Darwin to make it seem like he said the strongest survives. And no one has ever said that. But people try to use that unknown quote to validate their actions. The strongest survives. That's nature. But that's not what Charles Darwin said. That's not nature. Because nature is balanced. Nature shares resources. There's nothing in nature that's going to kill something completely off. Because if you kill something off, it's going to affect the rest of the ecosystem. And I proved this to you last year when we talked about Yellowstone, and all the hunters came into Yellowstone back in the 1800s, and they killed off the entire wolf population. And the water dried up. A lot of the animals kind of almost went extinct. And then you know what they did? Around the early 1900s, they brought the wolves back in to Yellowstone. And then the ecosystem balanced back out. Nothing in nature is going to wipe something completely out. That strongest survive things is not a true statement. It's just an excuse that horrible bullies use to validate their actions against the weak. And that's what the stock market is all about. The strongest survives. I'm gonna steal from the weak. I'm gonna take from the weak. Not realizing that at some point you're gonna be weak because the institutions are stronger than you. So when you steal from somebody else, somebody's gonna steal from you. And that's gonna be one of the laws of attraction that we're gonna talk about in a minute. So once again, the two laws that we're going to live by in the stock market is the law of unnatural selection, which is the strongest survives, or the 12 laws of the universe. And if we follow all 12 laws, we are guaranteed to make money in the markets. Using these 12 laws, we will be able to connect to the universe, find the universe's frequency, find that heartbeat, find that rhythm, and then we can get into the rhythm with the universe, and then we're able to find the heartbeat of the stock market, and then we can get in tune with the stock market's rhythm. And if we follow that, get in tune with that rhythm, that cadence, that frequency, the markets will hand us the money consistently. So the first law that we want to go over is the law of divine oneness. Now, I told you guys that people that use the law of attraction are just following one law. So let me give you an equal understanding. Let's say that you want to drive a car. And the first law and the only law that you abide by is getting your license. You don't follow any other law. You're switching lanes without a signal. You're going 200 miles an hour. You're not following any other law. Your only law you follow was getting a driver's license.
Coach, that sounds like everyday driving here in New York. This is crazy.
Oh, in Florida too, man. Because the people in New York come down here and retire. Oh, believe me. So I want to let you know that getting your driver's license, that is what the law of divine oneness is. None of the other laws matter if you don't have divine oneness. Because this is how you sync. This is the harmony that you're looking for. The harmony that we talked about yesterday when all the heartbeats sync up. The law of divine oneness, where everybody is harmoniously united. And how are you ever going to sync up? How are you ever going to find that cadence? How are you ever going to find that rhythm if you're not searching for harmonious unity? And think about this. When the market does move up, strong momentum. When the markets go down, strong momentum. That is a group of people that are buying with the same mentality, harmonious unity. So, first off, law of divine oneness. Everything and everyone is interconnected at a fundamental level, creating a harmonious unity that transcends the boundaries of time and space. When you're in an ecosystem, all of those living organisms have a harmonious unity. And that's kind of what we were talking about with Lion King and the circle of life. It's harmonious unity. So now let's apply this to the stock market. Everyone is connected in the stock market, same way. At any given time, there is a group of people who are harmoniously united in their understanding or predictions of the markets. This is what causes the market to have momentum, moving bullish up, bearish down. The point is to be selective when choosing the group, whether it's institutions or retail traders, or a combination of. And based on that selection is how you're going to be in harmony. Make sure you're choosing the right group. Once the group is selected, find the right timing, and you will notice that being in those united markets at the right moment or duration will decrease losses and errors. I already told you where the best time to find the unity, at the beginning of the cycle, the beginning of the trend, the beginning of the rally. You want to get in an early entry. The law of divine oneness is where it all starts. It's like getting your driver's license. How can you find rhythm and range and cadence if you're not focused on finding harmonious unity? Number two, law of vibration. Now, let me say this. None of these are in order. That law of divine oneness is the only one that's first. The rest of these can be interchanged depending on the market, depending on your analysis, depending on yourself where you are. All right. So don't think that these are in some kind of a set order. They can be interchanged. So the second thing we're gonna consider is the law of vibration. Because isn't that what we're looking for? A frequency, a rhythm. Everything in the universe is in constant motion or vibration. Now, here's something else, guys. I'm not showing you where it is, but some of these laws are also the 4 laws of physics. This is one of the laws of physics, that everything is in constant motion. So if I can, I'm going to point them out to you. But all of the 4 laws of physics are in here. They're just not called the things they are in physics. But this is definitely one of them, that everything is in constant motion. So the rate at which something vibrates is called a frequency. We went over this yesterday in the webinar. Things that move together in the universe share a specific frequency. And we showed you that stars share a frequency, planets share a frequency, planets and moons share a frequency. Everything, now let's apply it to the stock market. Everything in the supply chain is in constant motion. Finding an event or innovation that changes that frequency will also result in a trading opportunity. Everything in the stock market is also in constant motion. That price action doesn't stop, guys. Even when the markets close, when the markets open back up, it picks up where it left off. The stock market is in constant motion. Watching a particular market will allow you to find its frequency. Once you do, you will attain synchronicity at the timing of your entry and exits of your trades to be seamless and effortless. So here's what this says. As long as you're outside the markets, you're still finding the rhythm, you're still finding the range, you're still finding the cadence, but you cannot tell yourself that you're in sync with it until you enter the markets. And then you remain in sync while you're in the trade, and then you come out of that sync when you exit the markets. Let's say it for you again. You can find the sync, you can find the rhythm, you can find the range, you can find the cadence, but you're actually not in sync until you enter that trade. You remain in sync while you're in the trade, and then you exit. That is the law of vibration. Because you're not a part of the vibration on the outside looking in. If you're in the markets buying and selling, you're a part of the vibration. I hope that makes sense. Number 3, we're going to check out the law of correspondence. And this basically says what happens around us is a direct reflection of what happens within us. And I'm going to give you 2 things that people always say. Show me a person's friend. Show me a person's set of friends, and I can tell you who they are. You are a direct reflection on who you hang around. Show me a person's house. Show me a person's neighborhood. Show me a person's environment, and I can tell you who they are. What happens around us is a direct reflection of what happens within us. Let's apply this to the markets. Whatever attitude, mood, or even your moral code that you have will reflect in your trading. If you gravitate to trades or markets that allow you to express your thinking and feeling, here's what happens. Ruthless traders will inevitably find trades that will be ruthless to them. They're looking to be ruthless. They're looking to use the unnatural law of selection, where they can be dominant, where they can control the weak. The strong control the weak. They're going to go find markets where they can act that way. They don't want a docile market. If they have the mentality of the strong survive, the strong dominate the weak, they're gonna go and try to get markets where they can act just like that. What happens around you, because everybody else is being greedy, everybody else is being dominant. They're right where they want to be. They're right where who they are inside. Now let's flip it. Generous traders will inevitably find trades that are generous to them. If you like chaos, you're going to go find chaotic markets. If you like calm, if your internal is calm, you're going to go find calm markets. If you're greedy, you're going to go find greedy markets. I can care less what happens to everybody else around me. And that's why the majority of people in crypto have that mentality. They know when that coin goes up that it's fake. They're just trying to get in at the peak. And then when they get out and everybody else is stuck holding that coin at the end, I can care less what happens to those people. They're in the right markets because that's who they are inside. Chaotic and greedy markets will make you chaotic and greedy. It happens the other way. The market can turn you into that kind of person. Maybe you went in with a generous and calm inner self, but you keep trading that market over and over again, and it's going to be a reflection of who you are. It's going to turn you into a greedy and chaotic person. And just the opposite. Trading calm and controlled markets will allow you to be calm and controlled in your trades. The law of correspondence. Number 4, law of attraction. This is what everybody else is focused on. And basically the concept is like attracts like. And this is what most people don't understand. Like attracts like. So if you're a horrible person, you're going to get horrible back. If you're a mean person, you're going to get mean back. If you're a greedy person, you're going to get greedy back. If you like to thieve and fraud and scam, you're going to get theft, fraud, and scam back. Like attracts like. So you might get what you want in the very beginning, but then you want to be upset when somebody takes it away from you. Oh, this law of attraction doesn't work. Yeah, it does. Because like attracts like. It gave you exactly what you gave somebody else. Positive thoughts lead to positive outcomes, while negative thoughts lead to negative outcomes. Unlike a magnet or a battery where opposite energies attract, it's different with the law of attraction. Your thoughts, your emotions, and your actions become the same polar attraction. You don't attract the opposite with the law of attraction. You attract the exact same thing. Same polarity. So now let's apply this to the markets. Having negative thoughts and feelings will, first of all, bring you back to the law of correspondence, where you will gravitate to negative environments and other negative people. If you're negative, you're going to naturally gravitate to negativity. Secondly, it will also apply to the law of divine oneness, where you will send out that negative energy to the universe, and that negativity will come back around to you. That group of people that you selected to be one with, harmoniously united, all of you are negative. The stock market pays, but it also pays back. The energy you put into the stock market is the energy you will get back. That's not what they teach you in the law of attraction books. The law of attraction book says you can be as evil and wicked and horrible as you want, and you can still manifest anything you want. You don't have to be nice. You don't have to be generous. You just got to think about it really hard. Draw a picture of it. Write some words down. But we notice here that the 12 laws of the universe is saying just the opposite. The next law that we're going to go over is the law of inspired action. Action must be taken to bring change to circumstances in some form. Now, the law of attraction also teaches this, right? You can't just say something. You can't just think something. There's a level of action that is required. So let's apply this to the markets. There are some traders who never progress past a certain point in their development because they don't like action at the optimum time. There will be times when you need to take action, but you will hesitate on a decision or avoid it altogether. Action is essential, and timing is critical to find success in your trades and progression with your tradecraft. When it's time to pull that trigger, when it's time to get in the markets, you can't hesitate. You can't second guess. Action is required, and action at the right time is required. The next law we're going to consider is the law of perpetual transmutation of energy. This is another one of those laws of the physics. Energy is not destroyed. It is either transferred or transformed. That's the law of physics, or one of the 4 laws. Energy is not destroyed. It's either transferred or transformed. So here's what it is. Energy is constantly changing and can be transformed from one form to another. So if you have all of these constructs in the universe sharing energy, the energy is transferred to that living organism. That living organism is going to transform that energy into something that they can use. And they're going to feed off of that energy. And then now they're going to export an energy back into the universe. And then that's going to go to the next living organism that's going to transform that energy into an energy it can use. And then it's going to also give off another form of energy. And then that's how all of the universal constructs work. The energy is constantly traveling back and forth to all these universal constructs, giving energy on and off, bringing in energy, giving off energy. And even here on Earth, the whole circle of life is taking energy and giving energy, transforming the energy into something we can use. So let's apply it to the stock market. The stock market is constantly transforming and transferring energy. Buying a stock and watching the price increase is one example while listening to the news or other traders. Let me say this again. Buying a stock or watching the price increase is one example while listening to the news or other traders communicate with one another. Sometimes a polarity can be transformed or transferred as well, because a market can be bullish, positive. And one announcement, one news article, one conversation, and that energy can transform from positive to negative. That energy can transform from negative to positive. The energy can increase in intensity. You could take positive energy and turn it into negative. You could take positive energy into a negative market and come out with a negative mindset or negative trade, and vice versa. You could take a negative mindset into a positive market and still lose because of the negative mindset. The law of perpetual transmutation of energy. Energy is either transferred or transformed. That's what the market sentiment is. Market sentiment is emotional energy. And it is constantly being transferred. The next law we'll consider is the law of cause and effect. And we know what this is. We teach causal sequence. We want to guarantee our trades. We teach you how to look at causal sequence. And that's what the law of cause and effect is. For every effect, there's a definitive cause. Likewise, for every cause, there is a definitive effect. So let's apply it to the markets. You can use cause and effect in your analysis of the supply chain, trying to find supply and demand or predicting how institutions and traders will react to relevant events. I showed you that Ray Dalio is heavily focused on cause and effect relationships. So we can do the same thing. We can use causal sequence, and it's the best way to guarantee your trades, to be able to predict the inevitable outcome every single time. The next law we'll consider is the law of compensation. The energy we put into the world, be it in any form, thought, action, or intentions, it comes back to us in a harmonious symphony of compensation. Let's apply this to the markets. The stock market pays and pays back. You will be compensated for your efforts, whether it's good effort, bad effort, minimum effort, or extended effort. If you put a lot of energy into analyzing the markets, then your compensation will be greater than if you didn't. If you choose to gamble, then your compensation is going to be on that level where you did no work. If you bring greed and selfishness into your trades, then the stock market has no problem paying you back in the same way, with greed and selfishness. I already told you, you take from this person, and the markets are looking at you like, oh, that's how we gonna do it, and now they're gonna take from you. Law of attraction, like attracts like. You will be compensated in the way that you act, the way that you treated others. The next law is the law of relativity. And this basically explains that everything in our physical world is only made real by its relationships or comparison to something else in the universe. All right, let's apply this to the markets. Comparing your trading style after learning the system that we teach you, you can then compare how you're currently trading to how you used to trade. And you can appreciate your progression. That's relativity. How am I trading now? How did I trade yesterday, last week, last month, last year? And appreciate your growth. That's an example of the law of relativity. Let's show you another one. You can also compare your trading analysis to other traders and see how exceptional your skills are in comparison to everybody else. Everybody else is lost. Everybody else is confused. Everybody else is wrong. Everybody else is following other people. They have no education. They have no direction. And then you see how you're trading and the success you're having, the knowledge you have, the clarity you have, the prediction you have. And you can clearly see a difference between how you're trading successfully and how everybody else is either losing or giving the money back. Law of relativity. Where are we in relative example of someone else? The next law we're going to consider is the law of polarity. Everything in the universe has two opposite poles or dualities. And these opportunities exist in a state of balance. Now, I want to clarify something, because a lot of people try to use this as an excuse. But we're going to clarify that before we get into it. A lot of people think of yin and yang. You have to have evil to have good. And that's a false statement, because I bring you to the universe. There is no evil anywhere in the universe. The universe is harmoniously balanced, sharing everything good. Everything is generous in the universe. There's no greed. There's no entity out there going around murdering things and killing things off. You do not need evil to find good. The universe proves it. So that is not what the law of polarity is. This is a physical law, not a moral law, not a metaphysical law. This is a physical law where if something is pulling in one direction, there's going to be something else that pulls it in another direction. This is talking about science and physical universe. You do not need evil to have good. You do not need death to appreciate life. So let's apply this to the markets. The stock market has several opposing elements: bullish and bearish, inflation, deflation, profit and loss, progress, regress, calm, chaos, fear, confidence, greed, and temperance, positive and negative. Dovish and hawkish. The stock market is filled with two elements pulling each other in different directions. The first goal is to transform the bad to the good or the negative to the positive. That should be your default. How do I get to the positive? How do I transform this bad thing into a positive, into a good thing? The second goal is to avoid allowing the bad or the negative to transfer to you or your trading. You only want the positive polarity. You don't need the negative polarity to exist. Because here's the thing about positive and negative. Pay attention, guys. I'm going to explain it the best way. When you have two polarities of positive and negative, good and bad, anything positive and anything negative, let me show you the difference. Positive polarity doesn't pull. Positive polarity can be neutral. Nobody is pulling you to be good. Nobody's pulling you to be positive. You can just exist in a good and positive state. The only thing that pulls you or pushes you is negative. And that's why I say you can be good, you can be positive and not need the negative, because the positive doesn't pull you in one direction. Somebody sound off and let me know they understand this.
I got you. Yep.
Positive doesn't pull you in a direction. It's not making you do something, because that wouldn't be good. That wouldn't be positive if someone's forcing you to do it. And that's the reason why it's not equal balance. You can exist in the positive and good and stay in one place and just be good, just be positive. But when you're in that negative state or you're in the bad area, it's going to pull you to be more negative or be more bad. And that's why I tell you that if you're in an abusive relationship, abuse does not stay in one place. The abuse gets worse. But somebody who's doing good is not prone to be more good. I'm going to give 10,000 next time. You kind of just be good. You kind of just be generous and you're happy with the generosity you're getting. You're not moved to say, "Ooh, I got to give more next time." You're good with giving. But the negative and the bad doesn't work that way. It's always going to build into more chaos and more bad and more evil.
There's a saying, two wrongs don't make it right.
You got it. But that's how that part pulls you. And that's where the polarity kicks in. Because the good will try to pull back to put you back in that neutral state. And the same thing happens in the stock market. As long as you're in that positive state, in that controlling your temperance, you're looking for the bullish, you're making profits, you can stay in that state. But always remember that the other side, the polarity, is pulling you to be worse. And I'm going to bring back what we learned in the webinar yesterday, because that's kind of what Lonnie was saying, is that, oh, we can make money in the markets in the chaos. Well, no, the chaos is going to pull us further into the chaos. We don't want that. Now you see the difference of what I'm saying. A lot of people say, oh, yeah, you can make money, but do you want to? I'm trying to avoid that polarity. I only want to make profit. But if you're pulling me into some place where there's chaos, I'm now being pulled into losses. I want to be tempered. But if I'm going into the chaos, someone's pulling me into greed. All right, so the next law is the law of rhythm. And this is completely what we were talking about yesterday with finding the cadence and the rhythm of the markets. Everything in the universe has a unique rhythm that it beats to. I proved that beyond a shadow of a doubt, irrefutable. Every living organism has a pulse or a heartbeat, even planets and stars and moons and everything else. The different rhythms of these living organisms develops a pattern or cycle in life. The individual living organism will create the cycle and pattern. And if there are several organisms in the same system, they'll develop a pattern and cycle that matches everyone else. Let's apply this to the markets. Every market in the stock market has a rhythm. Even the opposite, the Forex and the crypto. The equities, the funds, the commodities, the futures, the bonds, they all have a different rhythm. That rhythm will change at different time intervals. Finding that rhythm is getting in tune with it, and that can be the difference between success and failure. You choose a market and you choose a time frame, a time horizon. And if traded consistently, your subconscious, which also has a predetermined timer already built in, your subconscious will find the proper cadence. It'll automatically find that rhythm and get into sync with it. The less you trade a market and the less you trade that time frame, the more you will lose that cadence. Once you attain that rhythm, you can move on to another market and sync with that one as well. Just keep in mind that if you deviate from the market long enough, you're going to start losing that rhythm. So you got to be able to keep revisiting it to keep that rhythm going. But every market has a rhythm. And if you're trading it consistently, you will be in cadence. Last law, the law of gender. And some of you are like, well, that can't apply. There's no gender in the markets. There's most definitely a gender in the markets. So the concept is that both masculine and feminine energy are required in balance to create anything in the universe. There is nothing in the universe that does not have both masculine and feminine energy. Let's show you by applying it to the markets. Masculine energy is designed to dominate over or insert itself inside of the feminine energy. Feminine energy is designed to support the masculine. So notice this. Stock market analysis works the same way. You're going to have a primary analysis. What is your primary, your first, your most important? And whatever your primary analysis is, that is your masculine. And then after you get done analyzing your primary analysis, you need to have a secondary analysis to confirm. And that secondary analysis is your support. That's your feminine analysis. Let's say it for you again. You're going to have a primary and a secondary. A primary analysis and a secondary analysis. Your primary analysis is your masculine. That's your lead. And you're going to have a supportive analysis that's going to confirm. That's your feminine. Let's give you an examples. When you're trading the oil market, your oil is going to be your masculine. And then in the prime correlation, your money is going to be your supportive. But notice this. If you're analyzing the financial markets, the banking, the money, then it's going to switch roles. Your money, the dollar is going to be your primary analysis. That's your masculine. And then now you're going to look at the oil as a supportive analysis. And this happens all over. You can bring in labor, consumer spending, housing, all of these analytics, geopolitics, doesn't matter what it is. One is going to be your primary depending on the market you're trading. And you're going to have a supportive feminine analysis. So find any correlated relationship between two assets or two markets. This is your polarity, divine oneness. So many other laws are coming into place. But you want to find two assets. We showed you yesterday that two stars started pulsating when they came in close proximity. Two planets pulsated when they came in close proximity. Same thing with this. Two assets, two markets. Correlated, pulsating. We've showed you the charts. When you lay the charts on top of each other, that they're correlated. Same thing. Moving at the same beat, same cadence. But depending on which one of those markets you're actually analyzing, one is going to be the dominant masculine and one is going to be the supportive feminine. You didn't even know that you can apply the 12 laws of the universe to the stock market. Nobody else is teaching you this. Now, think about it. We also showed you that they're all connected. So as you're doing one law, you're doing several. And then you're positioning yourself for the law of attraction to reward you better and more. Powerful. Do we have any questions on this? I want to thank everybody on TikTok and YouTube, guys. We're going to go ahead and get off now. If you enjoyed this presentation, come back tomorrow. We have more exclusive curriculum to share with you. Everybody, please be safe. Don't lose money in the markets. I'll see everybody tomorrow, bright and early around 7:45. Enjoy your day, guys.